Hey guys, and welcome back to my YouTube channel. My name is James Pakion and this is Pakion FX. So guys, welcome back again. Today I am actually making the first episode of a new segment that I have come up with, and it's literally just describing the market structure and how my currency pair, the one that I specifically trade, is going and is moving. So I will be producing such episodes every week to just analyze my pair with you guys, just look at where we expect the currency pair to be moving, and just show you how to be able to read market structure and know where and when to be able to take certain trades based on candlestick formations or the fundamental analysis part. And so guys, I hope you're going to enjoy this video, and I actually hope that you're going to learn a thing or two from it. So let's jump straight into it. As you can see, I am actually looking at the currency pair that I trade, and that is GBP USD. So guys, as you can see, this currency pair has actually been having plenty of movement the past few months. We actually managed to retest one of the key levels. That was the last time that we actually retested this level was in February 24th, and we managed to retest it again at the beginning of this month, which is on the 1st of June. And if we check right here, let's just see, the 1st of June was on a Tuesday, so we managed to retest this on a Tuesday. But I remember there was actually some news on Friday, the 4th of June, which is actually the first Friday of the month, and this is when they announced the NFP, which is the non-farm payroll in the US, and that actually also affected some movement in the market. So back into the charts, as you can see right here, so this the currency pair, after it managed to retest this key level, it went down actually a couple of hundred of pips, but it managed to break out this structure. Actually, in regards to market structure, as you can see, these are key levels that I have marked out. So by basically support, this we call support, and this is where the currency pair has retested multiple times but has failed to break to the downside. This is called resistance, and it's basically a point, or rather a point in the at price where the currency pair retests multiple times but fails to break to the upside. So we call that resistance. So that this is we call that resistance. So this is resistance, this is support. But what you will actually find out is that support can also become resistance. So once this currency pair broke out of this resistance, it actually came back and found support. So it failed to break down back again. So this wasn't actually a fake breakout, this was an actual breakout. And from this candlestick pattern, we can see right here, this is called a spinning, I think it's called something spinning. I'll just put it on description right here. But ideally it failed to break below this specific level, so it found support. So now the resistance became the support, and as you can see, the pair continued to move to the upside. It found resistance here, which is actually a very key level that like I've said, we retested on February. So when it found this resistance, it never broke above it. So now this we call resistance, and then the currency pair has actually been moving just around this point in sort of a range. It's probably going to find resistance, rather support, on this very key level that it broke out of, but we'll just have to wait and see. Clearly the market has actually been moving quite a lot the past few weeks, but I just want you guys to see a certain pattern that I have been looking at right here. So as you can see, this is sort of a range that this currency pair has been moving through for the past few days or even weeks. So once we managed to break out of this key level, we went back and we have been ranging between these two places for quite a bit, until finally we were able to get into this zone right here. and this I believe was because I think the UK economy was actually becoming better, because some of the restrictions in regards to COVID, I think, were starting to get lifted and the economy was opening back up. So we actually witnessed some strength in the GBP, and this is why we actually see that the currency pair was able to move up to this particular point. So actually we managed to catch quite a bit of pips here when we notice this formation of the candlestick pattern. So whenever you notice the formation of this bearish hammer candlestick pattern, and when it reacts to an actual key resistance level, then most likely it's going to be what we call a reversal. And as we noticed here, once it formed this bearish hammer candlestick pattern, it fell quite a couple of pips and we were able to catch this trade right here. So we actually managed to catch 41.90 minus 41.16, so that's about 74 pips. Yeah, so whenever you notice this candlestick pattern, then always, and it's actually appearing near a key resistance level, then know that pair is probably about to reverse. So clearly, as you can see, GBP USD has actually, I drew these two trend lines here, which are actually parallel to each other, and as we've witnessed, the currency pair has actually been moving within this range and within this resistance level right here. So as you can see, this is actually another way to read market structure right here. So let me just highlight this. So this is what we call a double bottom pattern. Whenever you notice this pattern near an area of interest, for example, now this was actually respecting this trend line. Whenever you notice a formation like this and this pair actually manages to move above the neckline, which is actually where it got too fast before it retested. So once it breaks out above this level, then you're now comfortable to take a buy or a sell depending on which direction this pattern is headed towards. So here we will have actually been able to catch a lot of pips to the upside, because as you can see, this double bottom pattern formed really nicely there. Another thing, as you can notice, we actually have another bearish hammer candlestick pattern right here, and once this closed, then ideally you could have taken a trade and milked a few pips from the market up to this resistance level. So again, once it approached this trend line, it reacted and went down straight into this key resistance level, but was able to come up, retested again. There was this bullish engulfing candlestick pattern right here, and it actually managed to go down. We were observing this currency pair today and we thought that we would actually be taking buys from this point, but unfortunately we were taken out of the trade. It hit our stop loss. So as you can see, once it formed this bearish hammer candlestick pattern, we thought that we were going to take buys, but it actually went into profit slightly and went into the negative right again, took us out. We thought it was retesting this trend line, took another buy here, went into slight profit, and then we took another loss. So we just sit and keep watching this currency pair, see how it reacts, because we've actually managed to break out from this resistance level right here, but we actually noticing some consolidation, or rather just a slow movement right here. So we just keep watching this currency pair and see how it moves throughout the week. In my thoughts, I think it will probably retest this very significant key level here, but again, we just have to sit and wait. So guys, that was it. I hope this video has been helpful to you guys. So just keep it locked, stay tuned for the next episode, and I will see you guys in the next one.